Hey, good evening, guys. That's right, I'm back. Welcome to the weekly watch list. This is Jeff Kohler, aka Option Addict, from over at www.tradingaddicts.com. Sorry for the disappearing act last week. Welcomed a new addition into my family. Spent the week in the hospital, but I'm back and ready to get back into the swing of things. So let's go ahead and get started. So, S&P goes to a new relative high here while I'm out of the office last week, which is a good thing. I kind of left abruptly on Monday with a pretty decent handful of long positions, so it wasn't all that bad. A couple things took place, though, while this all went down. We are pretty stretched here. I will give you that. The S&P goes to a new relative high. There is a little bit of a divergence going on here in the VIX where it hasn't quite gone on to a new relative low. And the one thing I don't like as I've kind of gone through my charts and looked over my indicators here this evening is that I'm getting a cluster of sorts on my little triple layered stochastic on equities and also in crude oil. We're getting all three time frames all overbought all simultaneously. Now, that indicator hasn't been right 100% of the time, but it's been right quite a bit. And so while this may or may not mark a short-term top here, if you go back and look at the last time that we've had this same signal generated, was right back here at the very end. Actually, that was the beginning of August. And you can scroll back, and that same signal eventually marked the top right up here as well. All three indicators, all in overbought territory, all simultaneously. So you can also go back and look at equities. You see pretty much the same thing with one exception. I'm going to go back to the S&Ps here, and that was the signal that was generated during the last time that the market acted in such a way, March, April, all the way up through May, when we just got into that grind mode where we just continually grinded higher, up and away. We diverged there for quite a long stretch, but that indicator, you see, generated that same signal at about 1160, and the S&Ps went on to rally up towards about 1215. So, but going back, you can take that's the one signal that hasn't been accurate within the last couple of years. So, take it for what it's worth. But I'm cautious up here. I still plan on playing individual setups the same way that we have been throughout the last several months. But as a, just as a portfolio strategy here, I think it makes sense to bump up your stops. Just be careful. So me, I've always got an abundance of setups, so let's take a look at a few dip buy setups, a few rip selling setups, and a few $10 darlings. Take a look. Alright guys, now let's bring it back to a couple of price patterns. There are a few things I'm watching here. For the most part, everything has pretty well moved, so there's not a whole lot to choose from. But I do have the following setups. We'll start with Yahoo. I do like this little pennant, this little wedge, this little triangle setup that's been forming here in Yahoo. It's been coiling up and consolidating. And I think a move outside, let's say north of about 1650, should get prices back up into $17.50, $18 range. So I think Yahoo looks interesting here, as does Boeing. From completing this big rounded bottom setup, I think all it has to do is break out of this little flag setup through here, and a breakaway move from this little consolidation range ought to send Boeing up to about 75. Defense stocks in general, I think, look pretty good right here anyway. Next, we'll go to KeyCorp, and if financials are indeed ready to rally, I do like the setup here. I gotta admit, this stock has done a pretty good job of staying north of its 200-day moving average. You look at this; it's got a nice, gradual, rounded bottom. I like the fact that it was down a little bit on Friday. I think if it holds the let's call it 830 level, I think you can buy that dip here, looking for a move up to 9 in the next couple of weeks. As does HBAN. Very similar pattern structure here. Tried to break out on Friday, didn't get it done, but there has been some elevated volume here over the last couple of days. So if it does break, look for a move up to these highs, which is going to be at about I'm just call about 650 or so would be the price target. Next is USU. Will this be the week that this thing finally goes? I'm not quite sure, but I do like the action point. If it can hold on to 5, I'd let it consolidate in here for another week or so, and once it pops, you should see a move up outside of the $5 range up to 6. A1, I think, also looks pretty good right here. Pretty good action on Friday. Might be ready to break out of this range. I think CIT looks pretty good the way that it's been flagging up here. Speaking of flags, CSC's got a pretty similar setup, as does SHO. I think looks pretty similar. Two more. RADS. Looking for prices to break away from this little pennant, this little wedge. And last but not least, looks like Office Depot is at a pretty interesting spot here in terms of this inverse head and shoulder type setup. Shoulder here, head down here, shoulder here at the 50-day moving average. Using about 450 or so as a stop. I think if it gets up there above 5, should be able to get up to about 550 or so short term. So risk reward I think looks pretty good here. Anyways, guys, that's all I got this week. I'm back in the office. I'm back at it. And make sure you catch me live every day, noon Eastern. We'll be doing live trading throughout the week. We've seen heavy double-digit returns over the last few months, so please stop by, pay me a visit. Let's make some money. This has been The Option Addict. That's been my watch list. Thanks for watching. Have a fantastic week.